Today we try to understand the topic out of scope in context of UE VAT. What does the out of scope mean? In UAE law, a transaction is out of scope if it is not considered a supply under Federal Decree Law number 8 of 2017 on VAT. It means no VAT is charged and transaction is not reported in VAT return and import VAT cannot be claimed. Categories of the out of scope transactions includes transaction outside the UAE VAT jurisdiction. For example, supplies made outside the UAE is the out of scope transaction. For example, a Dubai registered company arrange a sales of Chinese machinery and deliver the same from China to client in Saudi Arabia. The goods are shipped directly from China to Saudi Arabia without entering UAE. Since the goods never entered UAE territory, this sale is out of scope for UAE VAT purpose. In terms of services providing, any services provided entirely outside UAE to non-resident with no use or enjoyment in the UAE territory will be out of scope in terms of UAE VAT. For example, a UAE-based engineering consultancy firm hired by a German company to provide on-site feasibility study service in Japan. Since both supply and use or enjoyment of the service take place outside the UAE, this is out of scope for UAE VAT purpose. Another category is goods in custom suspension areas, for example, free zone or designated zones by cabinets. Goods stores are transferred within custom suspension areas like designated zones until they are imported into the UAE mainland. For example, a company free zone entity stores electronic components in Jebel Ali free zone warehouse and transfer the same from Jebel Ali warehouse to another within the same designated zones without entering the UAE mainland. This movement is considered out of scope for VAT since it happens within a custom suspension area. Supplies not considered as supply. For example, Article 5 of UAE VAT law, certain transactions do not amount to supply. And that includes the transfer of a business as a going concern and the transfer of the ownership of an entity, for example, selling company shares, and any intra-entities transfers within the same VAT group. For example, a parent company transferring cash to its subsidiary is not a supply. And other non-business transactions includes, for example, transaction not carried out in the course of business activity. For example, a private sale of a car by an individual who is not a registered VAT taxpayer is also out of scope in terms of UAE VAT law. Any government activities in the interest of public will be considered as out of scope for VAT purpose. And the monetary and financial transactions like issuance, transfer, redemption, and securities of stocks, bonds, and scoops are also considered as out of scopes in terms of UAE VAT. There is a distinction between out of scopes versus exempt and zero rated supplies. For example, for out of scope, no VAT is charged, and there's no need to report in a VAT return, and there is a no input VAT recovery is also available. But in terms of exempt supplies, there's no VAT charge is required and no input VAT is recoverable, but the entities is required to report it in its VAT returns file. And a zero rate Although the VAT is charged by 0%, but it is required to report in annual return, and it's also input VAT recovery is available on the sales of that zero-rated supplies. The practical business example, for example, a company sells 40% of equity stakes in another business is out of scope, and any cash injected as a capital in a company's bank account is also considered as out of scope. And any visa fee that is paid to government by the employer is also out of scope. And internal transfers of inventory from one branch in Dubai to another, for example, in Sharjah, within the same tax group, will also be considered as out of scope in context of UAE VAT law. And yes, this is it.